Haha, look at that, guys. Tesla just reported earnings and their stock is on fire. Closed at roughly 144 bucks. Yeah, roughly 144 bucks. And now after the bell, it is up over 152 bucks a share, up about 5%, which for a company the size of Tesla, that is a pretty big move. So in this video, you guessed it, we're going to break down Tesla's earnings, the stock, and we're going to go over some other companies, what stocks I'm looking at in general, the market. So sit back, relax, hit that like button, subscribe, and let's dive into the video. And oh, by the way, if you want some free money, use those links down below. Get some free money from Moomoo and from Weeble. But of course, let's get into the video first. You can get your free money in a little bit. So Tesla right now is ripping after the bell. And initially when these earnings came out, guys, it shot up to about 149, 50 bucks roughly. Then it actually gave back all those gains. I mean, you guys can see it here. If I zoom in a bit, it shot up, gave back all the gains. And now, we've just been on a ridiculous run the past couple hours. It's currently about 7:30 p.m. when I'm filming this video. And you guys can see we hit 143. So it's actually up more than just 5%. If we're looking at the low in the pre-market, we hit roughly 143. Now we're at roughly 153. We're up over 6.3% just in the pre-market, aftermarket. You guys know what I mean, right? And in terms of the numbers, they ended up doing $1.19 in EPS versus $1.13 estimated, so they beat on EPS, and they ended up beating on revenue, $24.32 billion versus $24.16 billion estimated. And in terms of gross margins for the automotive part of the business, which is pretty much all the business, right? At this point in time, margins came in at 25.9%, which, believe it or not, guys, it's really not that hard to believe. This is the lowest figure in the last 5 quarters. And you guys know their margins are taking a hit because, well, they're cutting prices of the cars and, well, they're trying to, get the cars into the hands of more people, and they're just putting a ton of money into, the Texas Gigafactory, Shanghai, all these different gigafactories. They're spending a ton of money at this point. They're spending so much money. And for guidance, guys, I didn't see anything in terms of guidance. Let me pull it up. I don't even know if they've issued guidance. But here it says Tesla says they expect to see above 20% automotive margin, 47K average selling price, which is still pretty big. I mean, it's a large selling price for an average selling price. And to be honest, guys, they're still luxury vehicles, at least in my opinion. What do you guys think? And until, of course, this is obvious, they get the cheaper model, it's going to be hard to really get these vehicles out to the masses. But once they do get that, whatever it's called, I forget what it's called, Model, I don't even know. Is it Model 2, right? I think it's the Model 2. Either way, whatever it's called, that is going to be what gets, obviously, Teslas across into the hands of people that are not looking to spend 45 or 47, 50K on a car, which, let's be honest, a lot of Americans are not going to be spending that much money on a car. So, yeah, we're not seeing anything on guidance here. Tesla says rising interest rates increase companies' vehicle prices by roughly 10%. I mean, yeah, that makes sense. Let's see, anything else here? But overall, I mean, look, the stock, if we're just looking at the chart, it is doing very, very well. If I pull the 4-hour time frame up now, if we're looking at Tesla, guys, it is breaking out of the moving averages for the first time in months. I mean, look at this. Back in, when was the last time we were above both moving averages on the 4-hour chart? Back in the end of September. Yeah, back in the end of September when the stock was over $300. That's the last time we were above the moving averages. And, now we're starting to break out, which is a good sign. But don't get it twisted, guys. Do not get it twisted. We're still, yes, we're peaking out of the moving averages, but still technically in a downtrend, as you all can see here on the 4-hour chart. And we're pretty overbought now. And now that the cat's out of the bag, we got the earnings. Are we going to start fizzling out here? That's kind of my concern. I don't know if this rally is going to have legs after this. It's already up 50%. I mean, the stock was $101 on the 6th of this month. We're talking not even 3 weeks ago. Now it's at 152. It is up 48%. All right, maybe not over 50%, but still pretty dang close to 50%. And it's at a point where I'm like, is it worth chasing at this point? I don't think it's worth chasing. If anything, if I was in Tesla as a trade, I would consider trimming it at this point, or maybe even selling out completely until we see what it's going to do at about 155, 160. Because if you look here on the chart, guys, let me draw some trend lines out. you can see back in November, we held 155 to about 160 two times. Or actually, no, that was more like 170 here back in the beginning of November, but in the end of November, we held about 165. This is where we're going to most likely see resistance, in the short term. And if Tesla could break out of there somehow, 165, 170, now we're talking about maybe a legitimate reversal, maybe even more upside, but we're not there yet. And again, we're still in a downtrend, even though we're peaking out of the moving averages. Keep that in mind. The last thing I'd want you guys to do, which, I can't tell you what to do, obviously. This is not financial advice, but I would hate for you guys to get excited by the rip here after the bell. Then all of a sudden we get rejected at 160. Boom, the dust settles, and then we're starting to head right back down to the 140s, 30s. Who knows, right? So keep it in mind that Tesla's up 50% in the past couple weeks. Cat's out of the bag with earnings. I don't know if this could have much more legs to it. Unless Elon comes and says some crazy stuff on Twitter about Tesla. I don't know if he tries to pump the stock or I don't know, guys. What do you think? Overall, great report. Decent, solid, I guess. I don't know, double beat for Tesla. Not seeing anything on guidance. And, it's breaking out after the bell. What do you guys think? Let me know your thoughts in the comments down below. I'd love to know what you guys are thinking. And when it comes to the overall markets, not really much of anything different. It was kind of a boring day overall today. SPY broke even. Same with Triple Q. Actually, it went down about 0.2%. But we had the Russell go up 0.25%. The Dow broke even. The VIX went down 0.6%. So in terms of the overall markets, it was not an exciting day. But obviously with earnings here and more companies reporting earnings, that's what's making it exciting. As we just talked about Tesla, we have a couple other ones to talk about in this video. So yeah, keep your eyes on SPY at about, close at roughly 400. Obviously, we've talked about these points, these levels many times in the past couple of videos, but I'll mention them again. One big level is 403. Another one's about 410 to 415. These are some key points of resistance coming up on SPY. And on Triple Q, guys, big resistance coming up at about where we are now, 290, 285, 295. These are critical points of resistance that the bulls just simply, point blank period, need to break out of. So yeah, what do you guys think? Let me know your thoughts in the comments down below. And I believe IBM reported today as well. Let me pull that up. Yeah, they did. And the stock's actually moving down a bit. It closed down 0.5%, closed at about $140 a share. Now it's at 138 after the bell. Not looking too pretty, guys. And let's see what these earnings ended up coming in at. Looks like adjusted EPS came in at 360, which was in line with the estimate. And we had sales come in at 16.69 billion, which beat the 16.4 billion estimate. Not too bad there. Mixed bag earnings for IBM. And in terms of guidance, looks like they expect full year 2023, what is that? Consolidated free cash flow to be about $10.5 billion. All right. Anything else here? Software revenue was at $7.3 billion when the analyst estimate was $6.97. That's a good beat there. Consulting revenue came in at $4.8 billion versus $4.76 billion estimated. Not too bad. And look at this, guys. IBM is looking to lay off 3.9 thousand employees, roughly 4,000 people, as a result of the Kyndryl spinoff. Actually, I'm not really familiar with what happened there. I'm not a avid researcher of IBM, guys, but it looks like they're laying off roughly 4,000 people as of result of a spinoff here, and it looks like they're doing a healthcare data and analytics business divestiture. Okay, yeah, that's a little bit out of my vocabulary, guys, but yeah, we'll look into that. We'll look into that here in a couple of minutes. But yeah, IBM, they're laying off employees. They're laying off about 4,000 people. IBM posts biggest annual sales increase. Oh wow, look at that. Biggest annual sales increase in more than a decade. That's pretty impressive there. Not too bad for IBM after posting. Looks like wait a second. IBM posts biggest annual sales increase in more than a decade, announces layoffs after posting lowest sales total since 1987 last year. Oh my God, I didn't realize that. IBM manages to increase sales by more than 6%, expects more growth in 2023. All right, let's look at this chart, guys. Let me pull the 4-hour up and see what in the world is going on. So, yeah, this doesn't look that great. I'll be honest. It does not look that great. I mean, we're under the moving averages. We have a death cross. We kind of have a lopsided head and shoulders. You guys see that, right? Left shoulder, head, right shoulder. We're dumping now, taking the lows out from the middle of December. That low was right around 137-ish, 8. Looks like we're starting to, we're right there after the bell. We're probably going to break under it, in my opinion. So don't be surprised if IBM slips even more. I don't know if it's going to happen tomorrow, next week. I have no idea. But in my opinion, it's going to be slipping even more. Let's see. What else reported today? We had LVS, which, oh, man, look at that. It just keeps on going, guys. LVS was at $28 a couple months ago. Well, more than a couple. About 8 months ago, 7-8 months ago. And, well, more than that, actually. Either way, it's up a ton. I mean, from $28 to $58, that is what? A double pretty much? Yeah, doubled up. And they just reported, it looks like they lost on the quarter. What do they lose? Adjusted EPS of -19 versus -9 cents. So they missed on that. And they ended up missing on revenue. $1.12 billion versus $1.18 billion estimated. Not the best there, but the stock is still ripping. It looks like here, Las Vegas Sands, recovery at Marina Bay Sands continued to progress during the quarter, with mass gaming revenue reaching an all-time property record. Travel restrictions and reduced visitation continue to impact financial results. Of course, they have a large part of their business, in China, and you guys know what's going on over there in China. But the stock just keeps on going, and at this point, as long as the Chinese, again, they have a big exposure there in China, as long as they're not cracking down on, the shutdowns and all that jazz, which they're starting to release, or, they're starting to ease up on that. At least that's what we're hearing, right? As long as that's the case and that continues, stocks like these will I'm not going to say they're going to go to all-time highs or anything, but they're probably going to be doing pretty well. Now if we get some crazy news out of China, expect LVS to get slapped. Probably not all the way back to those lows. I don't know if it goes back to $28, but it could probably sell off 10, 15, 20% on bad China news. Same thing with WYNN. Keep that in mind, WYNN. And of course, guys, the Chinese stocks, which we're not going to talk about really in this video, but if we get bad news out of China in terms of more restrictions, the economy's crapping, or it's not the best right now over there, but let's say it gets worse. Of course, Baba's going to get destroyed, which is up a ton, over 100% over the past couple months. Tencent will probably start to get hit again. Baidu, yada, 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 right, guys? So let's see what else ended up moving today. We had Shopify up 11%. We talked about this one earlier. What a day for Shopify. I forget what happened. Let me look here. Let me remind myself. We had a catalyst today for sure. Oh, no, they're raising the prices. That's right. They're raising the prices on certain plans. I don't even know. I don't use Shopify. I used to do, drop shipping and selling stuff on Shopify, years ago. Haven't done that in a while, so I'm not too familiar with what's going on with the different pricing and the plans, but they're raising pricing, and, they're raising the prices, and the stock is, of course, liking that because there's more money going to be coming in on the top line, moving forward, unless a lot of people cancel, which I doubt is going to happen. I don't know. What do you guys think? But look, it's breaking out, pretty overbought. Keep that in mind. Now, in the short term, we're at a multi-month high. Keep that in mind. In the short term, I think we're going to pull back a bit, honestly. I think whether it's tomorrow, next week, I don't know, the next day, we might be cooling off in the mid-40s. That's where I'd be thinking it could cool off, maybe even lower 40s. Low mid-40s is where it could find support, and then maybe we start ripping again after that. I don't know. But for one thing I do know is I'm not FOMOing into it right now. I'm not chasing it. The move, it's pretty much been made at this point. If I was in it, I'd be locking in profits, to be honest. That's just me keeping it real, guys. Not telling you guys what to do, but if I was in shop, I'd be locking in the gains and, waiting for that earnings report, which they are reporting earnings here in a couple weeks, 2.5 weeks in the middle of February. So SHOP, keep your eyes on that. Let's see what else ended up moving today. What moved today, guys? We had Foot Locker. They had a pretty good day, up about 3.4%. Oh, look at this. Foot Locker is now testing $40 again, $41, which clearly you guys can see this has been a big resistance stemming back all the way from the middle of August. We've been talking about this like crazy here on the channel, right? So, yeah, we're going to test it again. I'm going to set my alert at $41, and I'll put it at $41.50. Mark is at or above, and we'll see what it does at that point. If we do start ripping out of there, the ascending triangle plays out. We've covered this before, but I'll say it again. Foot Locker could start to go towards, in my opinion, mid-40s. If that breaks, we have a wide open gap to, low mid-50s. This could really start to get hot. So let's see what else did well today. Then we'll wrap the video up. If you guys are still here, by the way, hit that like button. Let's try and get at least 100 likes on the video. I challenged you guys, I think about a week ago, a couple days ago. We got like 80 likes. Can we get this video to 100 likes? Can we beat the 80 likes? Hit that like button, guys. Make sure to subscribe as well. I appreciate you guys as always. And what else? Let's see here. Disney did well today. Disney. Let's pull this up. Disney had a 2% Green Day. Oh my God, this thing, and we called this out, by the way, a couple days ago, and it was at like 101, 102, 103. It ripped and filled the entire gap to 108. Now, this is another one like Shop. I would not chase. I would not FOMO. In my opinion, the move has been made. Sure, it could break 110 and go to 115. That could happen, but the risk reward for me is not there. So I'm going to be watching Disney here in the short term to probably pull back. I think it could come down to about 98, 100, $102 again. Hold right around this point here. Pretty much just fill the gap back down to where it was a couple days ago. I mean, that's where I think Disney is going to be going. We'll see. We'll do an update on it. We'll do a follow-up in a couple days. But that's what I'm thinking. Disney might be coming down 100. Then it might bounce right back to 105.10. Then maybe start to break out, as we do have earnings coming out here. When are the earnings? Let's see here. On the 8th of February. Oh, my God. I didn't realize they're reporting soon here. Yeah, they're reporting pretty soon here. So Disney is up a ton. I mean, this stock was $84 in the beginning of this month pretty much. So it's at 108. This thing is heading into earnings up 30%. Keep that in mind, guys. Keep that in mind. So let's see what else ended up moving today. Let's see before we wrap up the video, guys. Oh, we had some down movers today. Snapchat got nailed. Not looking too great there. Snapchat went down about 6%. I wonder why. Let me see here. Any reason as to why here? A downgrade? It looks like they got downgraded a couple days ago. Yeah, it looks like they did. I missed that. That was about a week ago. Credit Suisse maintains outperform on Snap. Oh, they lowered the price target to $16. Maybe that's why. I don't know. But Snap got hit today. But overall, on the 20-day chart, I'm not gonna lie, the chart looks pretty decent. This is a pretty decent chart. It's holding the uptrend. We're down now about a dollar from the recent high, 7%. There could be a little opportunity here. Let's see how it goes. We have earnings coming up here in a couple of days on Snap. It looks like GameStop got nailed today. Same with AMC and Google. Look at that. Google gave back 2.5%. I didn't realize that. Yeah, they gave back 2.5% today. And this chart also looks pretty good on Google. Maybe a little pop could be coming couple days from now, maybe tomorrow here, the 20-day chart. Not too shabby on this stock. Let's pull up GameStop really quickly. GameStop looks a little bit toppy here at about $22.50. I'm not going to lie, guys. But on top of that, we also have an inverse head and shoulders. As you all can see, left shoulder head, right shoulder. If we break $22.50, even though it looks a bit toppy there, this could start to really take off. We shall see. And the last one, guys, let's talk about one more before I wrap it up. I like to keep the videos between 18-20 minutes. We have AMC. AMC went down 3 on the day, 3%. And it's the chart looks like crap. I'm not going to lie. This thing looks awful. But if AMC could start, never say never, start breaking out of $7, we start taking the high out from, about a week ago being about $6.50, $6.60, which we are a little bit away, ways off, off that price. We're at $5.30, but if we start breaking $6.50 again, $7, that's where this could really start taking off. But the truth is, guys, we're just not there. We are just not there quite yet. So with that being said, I'm going to wrap the video up. Let me know your thoughts in the comments down below. Hit that like button. Again, we're trying to get at least 100 likes on this video. And of course, make sure to subscribe as well. Get your free stocks for Moomoo, up to 15 stocks, each up to $2,000 using that link down below. And don't forget to get up to 12 fractional shares from Webull as well with any amount deposited. And also get 50% off your first year of Seeking Alpha Premium. And if you want to check out the Patreon as well, all those links are down below, guys. And full disclosure, all those links help out the channel. I appreciate you guys as always. And with that being said, cheers. I'll catch you in the next one. Peace out.